Well, there we have it. Some big earnings are out, indexes are running a little bit mixed, and that Ethereum ETF started trading today. Let me get you caught up to date. Hey, welcome back to Kyle's Financial News. Google produced a double beat today after market hours, down about 1.9% though after the news. Tesla beat on their revenue but missed on their earnings and is down about 8.5% for the day in total. Spotify beat on their revenue but also missed on their earnings and is up 12% for the day. Index are largely unchanged, and that applies to all three, the S&P 500, the Dow Jones, and the NASDAQ. Bitcoin is down about 2.25% for the day so far, shaving off just a little over $1,500 a coin. So circling back to that Ethereum ETF that I discussed in yesterday's video, there was the news coming out of the ETF approval, and so trading was expected to start today on a number of ETFs being offered by a variety of different brokers and companies out there. There are currently 9 Ethereum ETFs up and running in total. Now, I had a comment from a viewer and they were asking, isn't this a pretty risky asset? Why do brokers even want to be offering such a product to be allowed and held in accounts such as Roth IRAs to begin with? I think it's largely able to just be marked up to, one, the demand is there, and two, there's money to be made on all fronts, on the customer's front and on the broker and the management side. Now, in my reply to this comment, I suggested that there's no diversification between the holdings within these. Now, some of them are spot Ethereum ETFs, in that what you're buying is a product that is directly tracking the spot price of Ethereum at any given moment. So those don't have diversification, and I think that's more of what is being introduced recently. But there are products, there are ETFs out there that do diversify the holdings of cryptocurrencies beyond just Ethereum. So one particularly I was looking at, and this is not me making a sales pitch for any of these, this is just some information that I've gathered to share with y'all. BITW ETF, they take the top 10 cryptocurrencies by market cap, and supposedly they have some other measurements that they put in to decide which ones are worthy of being held and which ones aren't. But then they balance that once a month based on kind of the size of each one, and so then that determines how much of their cash in their portfolio goes to which one. So just using that one as an example, you can diversify through crypto ETFs, I suppose, is more of what they would be, not necessarily Ethereum ETFs specifically. But we saw a number of new ones come online today from Grayscale, VanEck, 21 Shares, Fidelity came out with one, Invesco, iShares, Bitwise, Franklin. There's a number of companies and brokers that have introduced now more, I believe they're all spot Ethereum ETFs. At least the few that I was looking into. So I want to dive into that a little bit though, because there's a lot that needs to be considered if you're just wanting to buy Ethereum, right? One company that I was looking at specifically today is Franklin Templeton, and they launched their Ethereum ETF, ticker symbol EZET. It's currently priced at 0.19%, and they have agreed to fully waive fees down to 0.00% until January 31st of 2025, this upcoming year, or for the first $10 billion in fund assets. So a number of these, I'm looking through a list here, a number of them are offering discounts on their expense ratio fees, at least for the introduction of the fund. But I would highly encourage anybody looking to get into these to become familiar with what the fund expense ratio fee will be when this introductory phase wears out. I'm looking at some of them and I'm seeing numbers upwards of 2, almost 3%. Grayscale Ethereum Trust is seemingly not offering any sort of introductory fee, and they're charging a 2.5% annual expense ratio. Now, keep in mind, just by holding Ethereum, there is no expense ratio. If you just go out and buy Ethereum through an exchange and take it offline, not through an ETF or anything else like that, there is no expense ratio. It doesn't cost you anything to hold it. Same with Bitcoin, same with any cryptocurrency. There is no expense ratio on any cryptocurrency out there. This is going to be related specifically to ETFs and having to have somebody or a company manage that ETF and either do balancing or whatever it is that they're claiming is worth 2.5% fees. The other thing I want people to keep in mind is just the cost of entry. For you to go and buy an ETF through a number of popular brokers, it's probably going to be commission free, which is great if they also have a very low expense ratio. But free is oftentimes masking numbers underneath that also need to be paid attention to. So let's say you decide, well, I don't want to buy the ETF then, I just want to buy cryptocurrency through my broker. And maybe you have an account with Fidelity and you use their crypto trading platform on there to get introduced to the crypto space. So the fee breakdown for Fidelity is that they don't charge any commissions for you to buy or sell crypto, but they automatically factor in a 1% spread on every trade. A 1% spread. Now, 1% maybe does not sound like a lot, but let's take Ethereum as an example. If the price of Ethereum right now is $3,472 at this very moment that I'm making this video, and you submit a market order to buy one Ethereum with Fidelity, it's going to cost you a total of $3,506, a $34.72 markup. Now, what are they doing with that? Well, they're pocketing the difference. They're taking what it actually costs to trade and transact Ethereum, which is a fraction of that spread, and they're pocketing that net difference. So they're charging you 1%, and then they're going to the open market and they're buying it for 0.005% spread, just an estimation of what type of discount they're getting. So though 1% may not seem like a lot, really what you're ultimately paying, at least at current prices, is probably upwards of $32, $33 in fees for one trade of just one Ethereum. Now, if you're buying 10 Ethereum, well, then they're going to balance that out all the way up to 10 Ethereum, which is completely counterpoint to the whole design and purpose of cryptocurrencies in the first place, right? The purpose of cryptocurrencies is to be a unmodifiable, publicly viewable, fast and cheap transaction method. Now, there are times where with high amounts of transactional demands and congestion that the fees do go through the roof, unfortunately. But let's just look at the cost to transact within Ethereum right now. The average transaction fee to transact with Ethereum right now today is about $1.40. Now, if you look at it right this moment, it's only going to cost you about 36 cents. So you can start to understand just the fluctuation of prices for transactional fees just within a day. And that's not one Ethereum. That's not 0.1 Ethereum. That could be 60 Ethereum. That could be 100 Ethereum. It could be 1,000 Ethereum. It's going to cost you 36 cents. Now, I suppose if you're trying to be exposed to a number of different assets, or maybe get some more hedging opportunities kind of built into a fund, then some of these ETFs might be right. But I think for the vast majority of people, it's not going to be all that attractive once you start investigating the true cost of it. If Ethereum is what you want to own and buy, or whatever other cryptocurrency, then you should just be going out and just buying that cryptocurrency. You could buy it through Coinbase, not particularly my favorite. You could buy it through Binance. Binance, for example, only charges a 0.1% spread. So you're already getting a 90% better buy-in, a 90% lower fee by going through a traditional cryptocurrency broker like Binance than if you were to go through Fidelity as a crypto broker. And they're all just offering it because they see the demand, they see the growing crypto space, and they're thinking, how can we make money off that? We don't want to buy Ethereum, we don't want to buy Bitcoin, but our customers do. So let's open up our own crypto platform, let's get involved, we'll charge them a 1% spread fee, we're going to make millions. We don't even have to own the underlying asset. We just have to provide a platform for our customers to purchase it through. I just want to highlight the importance of paying attention to both these ETFs' expense ratios and the fees, if you're not trading the ETFs, just the fees on some of these crypto platforms, just for your entry cost to get in and out. Some of these companies and these brokers are really trying to take advantage of the opportunity of the fear of missing out and the fear of being left behind in the crypto space, especially to new retail investors and traders. Now, if you've been in the crypto space for a while, you'll understand what I'm saying when I say you should buy your cryptocurrencies directly and move them off the exchange to something like a software or hardware wallet. And perhaps I'll do a video here soon on how to do that for anybody that isn't familiar with that. Mainly my encouragement to do so in relation to that is just because of some of the problems that we've seen with cryptocurrency exchanges in the past. It seems like every 2 or 3 years, one gets hacked and loses a whole bunch of funds. None of that is insured. None of it is federally really recognized and able to be protected. So you have to take matters into your own hands here if you want to be involved in that space. I wouldn't store anything on a cryptocurrency exchange, and quite frankly, I don't think cryptocurrencies stored with Fidelity or whoever are really any safer than the next guys. They're certainly going to be less susceptible to what we saw happen with FTX, which was just sheer negligence. But anybody is capable of being hacked or breached and broken into. We see it happen every day with a new company. I trust that a number of these financial institutions are paying a good penny to have top-notch security and have good development teams and security teams monitoring the stuff 24/7. It only takes one transaction to clean out a large holding of funds from within a exchange, and once it's out, it's out. That's a one-way ticket. And with that, I hope I've shed a little bit of light on why we're seeing so much more interest in the ETF space related to cryptocurrencies, and why we're seeing some brokers spin up their own cryptocurrency platforms and trading decks, even coming from institutions with CEOs that previously said it's a scam and we'll never support it, only criminals use it, and all that junk. Because criminals never used the United States dollar, they've only ever used cryptocurrencies. That excuse has always just been comical to me. Thank you so much for watching. Please consider liking and subscribing. I will see you all tomorrow after market close for an update then.